The U.S. House of Representatives has passed the One Big Beautiful Bill Act, which includes a proposal for a tax deduction on car loan interest, fulfilling a campaign promise made by former President Trump. This initiative aims to provide financial relief to car buyers by allowing them to deduct up to $10,000 annually in interest paid on qualifying auto loans. The deduction would be available for loans taken from 2025 to 2028 without the requirement to itemize deductions. However, eligibility is limited to vehicles assembled in the U.S., and the benefit phases out for individuals earning over $100,000 or couples earning more than $200,000, potentially excluding many popular imported vehicles and some higher-income households. Proponents, including Representative Bill Huizenga and Senator Bernie Moreno, argue that the deduction will stimulate demand for American-made vehicles and offer financial relief amid high vehicle prices and interest rates. However, critics like Jonathan Smoke from Cox Automotive question the deduction's effectiveness in significantly boosting vehicle sales, given the relatively modest tax savings compared to the overall cost of car ownership. Additionally, the Joint Committee on Taxation estimates a $57 billion loss in federal revenue, raising concerns about the fiscal impact. The bill also proposes to end current federal EV tax credits earlier than planned, potentially increasing the cost of owning electric vehicles, while introducing new fees for EVs and hybrids, further complicating the bill's impact on the auto industry and consumers.
The New York Times Company has entered into a multi-year licensing agreement with Amazon, focusing on the integration of artificial intelligence to enhance content accessibility and user experience. This partnership will allow Amazon to license editorial content from the NYT, including its NYT cooking feature and The Athletic, for AI-related applications. The collaboration aims to display real-time summaries and excerpts of NYT content within Amazon's products and services, such as Alexa, and to train Amazon's proprietary AI models. This strategic move is designed to broaden the reach of Times journalism to wider audiences and enhance Amazon's customer experience by integrating quality content into its AI ecosystem. This agreement is part of Amazon's broader strategy to incorporate AI into its services, aiming to streamline and personalize the shopping experience. Recently, Amazon has been testing AI-generated audio summaries for products on its mobile app, indicating a shift towards more passive and frictionless consumer interactions. While Amazon is making strides in AI-enhanced consumer tools, not all ventures have been successful, as evidenced by its stalled software collaboration with automaker Stellantis. Nonetheless, the partnership with the NYT underscores Amazon's commitment to integrating high-quality content into its AI-driven platforms, potentially boosting user engagement and retaining customers within its ecosystem.
Litecoin has taken a significant step into the realm of smart contracts with the launch of LitVM, a new Layer 2 chain. Announced at the Litecoin Summit by Lunar Digital Assets, LitVM is the first zero-knowledge Layer 2 solution for Litecoin, aimed at integrating on-chain programmability and real-world asset functionality. This development is supported by the Litecoin Foundation and built using Bitcoin OS and Polygon's Chain Development Kit, CDK. Traditionally recognized for its speed and simplicity as a peer-to-peer cryptocurrency, Litecoin is now expanding its capabilities to include smart contract functionality and cross-chain liquidity, a move that could broaden its appeal and utility in the decentralized finance, DeFi, and Web3 spaces. The introduction of LitVM positions Litecoin to compete more directly with other major cryptocurrencies like Bitcoin and Ethereum, which have already embraced Layer 2 solutions to enhance scalability and functionality. By providing a trustless Ethereum virtual machine (EVM)-compatible environment, LitVM allows developers to deploy decentralized applications (DApps) using native Litecoin assets securely. This infrastructure not only supports tokenized real-world assets and stablecoin payment systems, but also facilitates programmable liquidity, potentially increasing Litecoin's total value locked (TVL) in DeFi ecosystems. As noted by Lunar Digital Assets CEO Roch Zacharias, this move addresses the growing demand for Layer 2 solutions, which have amassed over $12 billion in combined TVL across Bitcoin and Ethereum rollups, and could significantly enhance Litecoin's global usage and adoption.
The U.S. economy's contraction in the first quarter of 2025 was revised to a less severe decline than initially reported, according to the Bureau of Economic Analysis. The updated GDP growth rate stands at negative 0.2%, a slight improvement from the earlier estimate of negative 0.3%. This adjustment reflects stronger than expected investment and consumer spending, which partially offset the broader economic slowdown. The revision indicates a marginally more resilient economic environment than previously thought, though it still underscores challenges facing the U.S. economy. Additionally, core inflation, which excludes volatile food and energy prices, was adjusted slightly lower in the latest estimate. This revision could influence Federal Reserve policy decisions, as a lower core inflation rate might reduce pressure on the central bank to tighten monetary policy aggressively. The revised GDP figures and inflation data are critical for investors and policymakers, as they provide insights into the economic trajectory and potential future adjustments to interest rates.
U.S. financial markets experienced mixed trading after a federal court blocked several tariffs imposed during the Trump administration, leading to modest gains in major indices. The S&P 500 and Nasdaq Composite rose by 0.5% and 0.6% respectively, while the Dow Jones Industrial Average saw a slight increase of 0.1% after recovering from earlier losses. The court ruling, which challenges the use of the 1977 International Emergency Economic Powers Act, temporarily suspends tariffs on imports from countries like China, Canada, and Mexico. This decision initially fueled optimism by potentially mitigating inflationary pressures and GDP declines, but uncertainty remains as the White House may seek emergency relief from the Supreme Court if a federal appeals court does not act swiftly. In the tech sector, NVIDIA's strong quarterly performance, driven by demand for artificial intelligence technology, boosted the S&P 500, with its stock surging by 5.9%. C3I also saw a significant 25.6% increase after exceeding profit expectations and announcing an expanded contract with the U.S. Air Force. Despite these gains, NVIDIA's earnings did not significantly alter overall investor sentiment. As broader trade tensions continue to pose challenges, European markets were subdued, with the Stoxx 600 and Germany's DAX declining amid anticipation of German inflation data and the European Central Bank's upcoming policy meeting. Persistent inflation complicates potential ECB rate cuts, despite weak economic growth. Meanwhile, Asian markets closed mostly higher due to improved risk sentiment and bargain buying, particularly in South Korea, Taiwan, and Japan. In the U.S., technology and AI-related stocks maintained upward momentum, while oil prices remained stable amidst mixed signals from inventory data and OPEC+ expectations. Treasury yields were steady, with the 10-year yield slightly easing to 4.45%, and the U.S. dollar weakened slightly, reflecting ongoing inflation and policy uncertainties.
NAPCO Security Technologies, Inc. NSSC is currently facing significant scrutiny due to ongoing legal and operational challenges, which have negatively impacted investor confidence and its stock price. The security technology company has seen its shares decline by nearly 21% year-to-date. The situation escalated following the release of its third-quarter financial results for fiscal year 2025, which highlighted a 10.8% year-over-year drop in net sales and a 23% decline in net income. Despite exceeding earnings per share expectations, NAPCO's overall revenue fell short of Wall Street estimates, primarily due to inventory reductions by key distributors. The company is also embroiled in a securities class action lawsuit, Patel versus NAPCO Security Technologies, Inc., et al., which alleges that NAPCO misled investors about its demand forecasting and margin targets. The lawsuit claims that NAPCO's leadership failed to disclose vulnerabilities within its distribution network and the risks of relying heavily on a few major distributors. These issues became apparent after a disappointing February earnings report, revealing a 25% decrease in equipment sales, leading to a 26% drop in NAPCO's share price in a single trading session. Hagens Berman, a shareholder rights law firm, is investigating these claims, emphasizing the need for transparency and accountability in NAPCO's operations. The outcome of this investigation could have further implications for NAPCO's financial standing and investor relations.
Boeing Co.'s shares rose by 3.14% to $207.86, following a strategic announcement at the Bernstein Strategic Decisions Conference, outlining plans to increase the production of its 737 MAX aircraft to 47 units per month by year-end. The company also reported a 30% reduction in quality defects, a factor that likely buoyed investor confidence. This production ramp-up is part of Boeing's strategy to recover from previous production challenges and enhance its market position. The resumption of airplane deliveries to China, set to commence in June after a hiatus due to trade tensions, is anticipated to significantly boost Boeing's international sales and strengthen its global market presence. The 737 MAX, a critical component of Boeing's commercial aircraft offerings, is central to the company's growth strategy. The planned production increase signals a positive shift in operational capabilities, while the reduction in defects underscores a commitment to quality and safety. Re-establishing deliveries to China, one of the largest aviation markets globally, could substantially impact Boeing's revenue and competitive standing. These strategic initiatives are seen as pivotal in navigating the complex geopolitical landscape and reinforcing Boeing's position as a leading aerospace manufacturer.
Guyana, a small nation on the northeastern coast of South America, is on the brink of becoming a major player in the global oil market following the discovery of 11 billion barrels of proven oil reserves in 2015. This discovery, valued at over $500 billion, positions Guyana to produce up to 1.2 million barrels per day by 2028, accounting for 1.1% of the global oil supply. Such a transformation could make Guyana the country with the highest oil production per capita globally. The oil boom is part of a broader resurgence in offshore oil production in Latin America, potentially extending into Brazilian waters, and is expected to significantly boost Guyana's economy, with oil revenues projected to double the size of its pre-oil economy by 2036. The government of Guyana faces crucial decisions on managing this newfound wealth to avoid the resource curse that has plagued other countries. A consortium led by ExxonMobil, a leading non-state oil firm, is spearheading exploration and development efforts, ensuring efficient and environmentally conscious extraction. Guyana has also established a sovereign wealth fund to stabilize the economy against the volatility of the commodity cycle and to safeguard future generations. However, challenges remain, including political divisions and the risk of corruption. The government is urged to pursue a bipartisan consensus on fiscal strategy, focusing on infrastructure development and gradually increasing direct financial distributions to citizens. International oversight is recommended to enhance transparency and prevent mismanagement, drawing lessons from neighboring Venezuela's missteps.
NVIDIA Corp's recent financial performance has sparked significant activity in the semiconductor and AI technology sectors. For the first quarter of fiscal 2026, NVIDIA reported a 69% year-over-year revenue increase, reaching $44.1 billion, surpassing Wall Street expectations. This growth was largely driven by its data center segment and the ramp-up of its new Blackwell chips, marking a transition from its previous Hopper chips. Despite facing $8 billion in export restrictions, NVIDIA remains optimistic, projecting $45 billion in revenue for the upcoming quarter, indicating sustained demand for its AI infrastructure solutions. The robust performance of NVIDIA's AI chips is expected to positively impact server original equipment manufacturers, OEMs, such as Dell Technologies, Hewlett-Packard Enterprise, and Supermicro Computer, which integrate NVIDIA's technology into their AI server offerings. This trend signifies a growing market for AI servers, as major hyperscalers increase the deployment of NVIDIA's NVL72 racks. Stock market responses varied, with Dell and Supermicro Computer experiencing slight declines, while Hewlett-Packard Enterprise saw a modest increase. Additionally, ASML Holding NV, a key supplier of advanced lithography machines crucial for producing NVIDIA's high-performance chips, saw its shares rise by 1.05% to $754.35. The semiconductor rally, driven by NVIDIA's impressive results, has bolstered positive sentiment across the sector. Analysts project NVIDIA's future market cap could reach $4-5 trillion, highlighting the potential for growth in the AI and semiconductor industries. ASML's strategic position in the supply chain positions it to capitalize on the expanding AI market, underscoring the interconnectedness of the tech industry and the substantial growth potential driven by advancements in AI technology.
Federal Reserve Chair Jerome Powell's recent meeting with President Donald Trump at the White House underscored the central bank's commitment to maintaining its political independence amidst ongoing pressure from the administration. The meeting, also attended by Treasury Secretary Steven Mnuchin, highlighted key economic topics such as growth, employment, inflation, and interest rates. Despite Trump's persistent calls for drastic measures like reducing interest rates to zero or negative levels, Powell reiterated that monetary policy decisions will be based on objective economic analysis and not political influence. This meeting is significant as it comes at a time when the Fed has already enacted 3 rate cuts this year to bolster the U.S. economy amidst global trade tensions and a slowdown in economic growth. Powell's emphasis on the Fed's independence and data-driven approach to policymaking is crucial for market stability, as it reassures investors and stakeholders that decisions will be made with a focus on long-term economic health rather than short-term political objectives. The Fed's stance is likely to influence market sentiment, particularly in sectors sensitive to interest rate changes, and will be closely watched by financial markets for any indications of future monetary policy direction.